Is it possible to get a tax deduction for a charitable donation without actually making a contribution to a charity? Well, there is a very special account that allows you to do just that, that allows for bunching of charitable donations and doing a number of other things that we'll get into in this video. My name is Merrill Taylor. I'm a CPA. I've been working with clients for over 20 years, helping them save tens of thousands to millions of dollars on taxes using proactive tax strategies. So let's jump into this special account. Is what it is. It's called a donor advised fund. And a donor advised fund is a special account that allows you to make contributions into this account and get a charitable deduction for it, even though money is not technically going to a charitable organization. It will eventually, but it goes into the special donor advised fund. Most brokerages have them, Fidelity, Vanguard, you name it. You know, if you had a brokerage at any of those places, you could call and say, hey, I want to set up a donor advised fund, and they'd be happy to help you do that. Here's the way that it works. So you donate assets to a donor advised fund, or it's often called a DAF, D-A-F, a DAF. You can contribute cash, stocks, crypto, business interests, all sorts of things can go into a donor advised fund. When the money goes into the donor advised fund, you receive a charitable contribution deduction the date that it goes in that year. The donated funds are then invested inside of that fund and they grow tax-free. So let's say that you put $100,000 in and that grows at 5% a year. So every year it's growing at $5,000. That grows tax-free. You don't pay tax on it, and it gives you more money that can then be donated to charity down the road. You then recommend grants to IRS-approved charities, which are 501c3s and other type of approved charities, that money can go out of that donor-advised fund. Now, the key tax benefits is that you get an immediate charitable deduction when it goes in. If it's a cash donation, you can get up to 60% donation. So if your AGI, your adjusted gross income is $100,000, you can give up to $60,000 that year and get a deduction. If you're giving long-term appreciated assets such as stocks, then that's up to a 30% deduction that you can get by putting into that donor advised fund. The advantage of donating stocks is that you don't have to recognize the capital gain on the donation of those stocks. So let's say that the stocks are worth $10,000 and your basis, you originally bought them for $2,000. When you donate them to the donor advised fund, you get a $10,000 deduction and you don't have to recognize gain on the $8,000 between the fair market value and your basis of it. Then there's the tax-free growth that we mentioned, that grows tax-free and allows you to give more to charity. This is typically done when people are trying to bunch their deductions, put multiple deductions in a year. It's often done when there's a liquidity event. Let's say that you sell a business, you recognize a really large gain from that, and you would like to take some of that gain and make charitable deductions, but you don't want that all going to the charity at once, or you haven't identified what charity you want it to going to. So you could just roll or just donate some of those proceeds into the donor advised fund, get a deduction for it in that year, and then at a later time decide which charities to send it to. So liquidity events like a business sale is helpful. If you just have a high income year and you want to offset some of that tax liability, a donor advised fund is a great option for there. If you wanted to do it before retirement, you're in a high tax bracket. You know, during retirement, you want to make charitable contributions, but you're either going to be below the itemized deduction level in retirement, or you know you're going to be in a lower tax bracket in retirement, and you'd rather receive that deduction when you're in a higher tax bracket or when you're able to itemize. You can bunch all of those, put a large donation to the donor advised fund in there, and then in future years make donations to those charitable organizations as you're in retirement. You can also use it to establish like a family legacy of charitable giving. Donor advised funds can be passed down to heirs, and so it can set up this legacy of giving to charities that way. So what are some things that you can't do with a donor advised fund? Some cautions. You can't use the funds for your personal benefits. Like you can't buy tickets to galas and do silent auctions and things like that. You can have no personal benefit for it. It has to be donated. You donate to individuals or you can't donate to individuals or non-qualified organizations. So you can't do like the GoFundMe accounts, or if you know a family in the neighborhood that needs help, that you don't give money to them from the donor advised fund. It has to go to a qualified charity. And then you cannot take another deduction when the money goes out of the donor advised fund and actually goes to the charity. Your deduction comes when the donation is made to the donor advised fund, which means that when that appreciates in there and it's not subject to tax, when you give that money, let's say you put $100,000 in, it appreciates to $105,000. When that $105,000 goes to charity, there's no additional deduction. You got the $100,000 deduction when the money went in. The $105,000 that goes to charity is not deductible. So that is how donor advised funds work. They're very powerful. It allows you to bunch donations, put them together, get a large deduction in 1 year, and then spread out your donations to charities in the following years. So if you'd like more tax updates, make sure to subscribe to our channel, and you can go to taxtutor.com to subscribe to our newsletter.